Okay, stocks, the numbers. This one's for Jay. We're looking at Enovix Corporation, ticker symbol ENVX, listed here on the NASDAQ. Stock recently did a stock offering, reported earnings. They came in above analyst expectations, actually. On the EPS side, they reported a loss of 17 cents a share. Analysts were expecting a loss of 21.2 cents. They beat that by almost 20%. And the revenue came in a couple of 100,000 above analyst expectations. We were looking for 4.11 million. Company brings in 4.317 million. So obviously the offering brought the stock down. We know that, how that works. Last time we looked at it was back here on the news that they got that order, but again, we had no financials disclosed. The stock exploded from 12 up to 17, continued to run up to 18 and a half, even higher actually, excuse me. And I was basically saying, of course, in the numbers, in my opinion, stock should come back down. I don't remember, I don't know, $8, $7, we said or whatever. Stock pulls back to 734 and then started to bounce, got back into the low teens, and then earnings came out again. We had a beat, but we have an offering, so the stock takes a hit down to the nines, actually going as low as 805. So let's see a couple of things. First of all, here in the technicals, let me see a trend line here. We're looking at a low of 570 up across that bottom there. Okay, so interestingly, you can see that as we connected from that bottom on April 25th, 24 to that bottom there of September 10th, 24, you can see that on the news of the offering, the stock drops down to the low eights and then bounces basically right at that trend line and starts to go back up into the nines, and today basically flat, right? 904, only up about 3 cents. So this right now in the moment is a pretty good sign because in my opinion, in the numbers, this stock can easily pull back to the sixes and the fives, just based on the fact that we're only bringing in a couple of million and it's costing us tens of millions to do so. So right now, this company's in a little bit of a rough spot. But on the news of the offering, again, Wall Street, everyone felt it went down to 8. That was enough, and then people started buying that big dip. So we have to see if we're going to hold this support trend line here and continue kind of in this range right here from the last chunk down that began the sell-off, right, after the news. But in my opinion, if we do happen to break this low 8 trend line, we're probably going to hit this level here again of the very low sevens. And this is our all-time support trend line. So hypothetically, again, I'm just drawing this out. I'm not saying the stock could go down there, but hypothetically, I mean, we're looking at, all right, this is annoying here. But anyway, we're looking at like 530, which technically would be a new 52-week low. Now, listen, in my opinion, again, it is possible, right? Because this is, I don't want to say it's similar, but I mean, the stock with the way it performed and how it looked in the numbers. This is the comparison. When we looked at Luminar Technologies, LAZR, I believe it was a similar situation, right? They were bringing in like 5, 6, 7 million a quarter. It was costing them like 20, 30 million to do so. So when the company received some good news, it got a bump, but then it was short-lived. The stock like immediately sold off back to where it was, pulled back down to earth. That stock was specifically forming a descending triangle, if memory serves correct. So we ended up breaking down. So, it was a little bit of a perfect storm to bring that stock down. But in the numbers, right now, market cap 1.6 billion. And, I always said, in my opinion, if we want to value kind of these state of infancy, beginning to grow, up and coming small cap stocks, if we want to value them at high 100 millions, a billion, 1.1 billion, in my opinion, that seems pretty fair. So right now the market cap's 1.6 billion after the pullback, right? So it seemed like the issue, in my opinion, over the last couple of months was the massive surge that took place on that news of that order. Because again, I said that we technically didn't get any financials disclosed. So was it good news? Should the stock have popped? Yeah. Should it have went from 12 to 18 and run 50% off of that news? The answer is no. And this is why it's dangerous when we pump these stocks, because I always say again, when a company doesn't really deserve it in the numbers, people will feel like they missed out. They'll start buying at 16, 17, 18, and then that's when Wall Street says enough is enough, and it hits resistance, and it starts to chunk down and pull back down to earth. Now those people are down 40, 50% right now, right? So this is why when we pump a stock like this, it's dangerous, especially if it's not justified, but more importantly, if it's not justified in the numbers. So we'll rehash some of the news that came out, but 1.6 billion market cap. We can see the EPS, we're still operating at a loss, but we can see over the last couple of quarters, we have been starting to climb nicely. So that technically is a very good sign. The last 2 quarters healthily reporting more narrow losses than Wall Street expects. So in my opinion, they have to keep this going to keep the stock from cratering down. But we technically, again, beat earnings, but we just offered more stock. So if for any reason going into and out of elections, markets begin to sell off, I'm just saying this now, in my opinion, it probably will take Enovix with it, and you could possibly see those lows down there of the low 5s. Just throwing it out there. But EPS seems to be growing nicely. And yeah, see, if we look, we just got earnings, and 4.3 million. Unfortunately, it cost us 22.5 million to do so. That is heavily weighted to the downside, right? That's not the type of cash burn that you want to see. And I understand people are going to jump down my throat. You don't understand what they have on the back burner. They're about to produce groundbreaking technology. Yeah, I know. I get it. With all due respect, though, you know, you guys make the same argument about every stock we look at, right? Every company is not changing the world. We have to be realistic here. So that's why I like to look at numbers. That's just me personally. But also, again, you can see this time last year, we lost 16 million. Now we brought in 4.25 million, but we lost 22 million. So this is why I appreciate the fact that losses are more narrow than Wall Street's expecting, but in my opinion, they do still seem pretty extreme. And if we look annually here, we can see for 2023, it was a rough year for the company, and ended up losing about 200 million in change, brought in only 7.6 million. So the bleeding is still continuing, even though technically our net margins are getting better. I mean, we're still sitting here at minus 500%. So that's why I'm saying a stock like this, if it goes down before it goes up, it's understandable. Analysts still, for the most part, pretty bullish on this company. Everyone is waiting for them to start delivering and pump up this revenue, which, as you see, is supposedly expected now over the next couple of quarters. We can see next quarter revenue expected essentially to double now quarter over quarter, going from 4.25 up to 8.66 million, back down to 613, 66, and then up to almost 9 towards the second half of 2025. So now we may start rocking and rolling. But again, the problem is with the cash burn, even with the company seeing some beefed up revenue forecast, even if they do beat these numbers and post, 8.8, 6.5, 7, 9.1, of course that will be very good. But again, looking at the actual money they're bringing in and how much it's costing them, even with a lot of you feeling that this may be a cheap price, we technically could take like at least a 25-30% haircut from this level, which is why I'm saying, again, we may potentially break below that support trend line to the next line of around like 730. So we have to keep an eye on that trend line here with Enovix. But technically, the company has been growing very nicely over the last couple of quarters. As we see, we started out just doing tens of thousands of dollars. No one cared about us. Posted 200K, estimates at 160. Boom. Then all of a sudden we started bringing in a couple of million a quarter. Beat these estimates now 4 quarters in a row, technically 5, but I'm going to, go from here when we actually started bringing in a couple of million. So 4 quarters in a row, we're bringing in several million. We're coming in above analyst expectations. Very good sign. Looking at the burn as well on the EPS side. Yes, it is negative, but if we go back the last 7 quarters, we only once slightly lost more than Wall Street expected. So technically, all of this is going according to plan. The problem, as I always say, these companies unfortunately overvalue themselves coming out of the gate. Then, of course, it was the tail end of 2021. The stock randomly exploded because they, mentioned batteries, right? That's what this company does. Design development of silicon anode lithium ion batteries. That's what I mean. Anything with lithium, EVs, batteries, fuel cells, you guys saw it. They all exploded to ridiculous valuations. And even at the time, people were saying it should be worth more. So this is why it is very dangerous, again, to look at these overinflated companies, especially, again, at the time, they weren't really delivering anything. So to give them that much value is just foolish, in my opinion. But it's unfortunate also because we pumped them up, so now they're kind of maintaining value. And we could say maybe down here between like 7 and 9, the stock's been trying to hold. But it's just unfortunate because anytime these companies, I feel, anytime they get a little bump up in value, that's when they issue more shares, right? They take the money when they can get it at a higher value. And, sometimes we see them just continue to step down. And, it kind of begins that drop-down snowball effect. So, in the numbers, again, it could go lower. Here's why Enovix is a great, quote, buy the bottom stock now. Let's see. A hammer chart pattern. Ooh. That's it. Imagine writing this whole article because you saw a hammer. That's crazy. Enovix files 8K. Okay. Almost 10.5 million shares. Price per share of $9.22. Also granted underwriter option exercisable 30 days. Gross proceeds from the offering are expected to be approximately $100 million before deducting underwriting discounts and commissions and estimated offering expenses payable by the company. Yep. The underwriting. Yep. Okay. We're reading. Okay. So they're bringing in $100 million, but again, unfortunately, that's probably only going to last about 4 or 5 quarters, potentially. Downgrades Enovix to neutral from buy. Has average price targets ranging from $14 to $100. Extreme. $100 million offering. Enovix expects to use the net proceeds from the offering to achieve high volume manufacturing at its Fab 2 production facility in Malaysia, as well as for general corporate purposes. So, again, to invest into your own, production line to beef up output, totally understandable. And I'm sure people are going to say, well, this is a good thing because you'll see, 2-3 quarters from now, the revenue is going to bump up. Okay, fine. Understandable, right? But again, we have to believe it when we see it. We can't just pump these companies up. Oh, it's worth $6 billion because, they said it's going to be great. I mean, if you ran the company, you'd say it's going to be great too. Even if behind closed doors, all you saw was red everywhere, all over the balance sheet and whatnot. So, I mean, we know what's going on. So, similar, this reminds me of Origin, right? I said the same thing. Oh, they're trying to, pump out more production and revenue's going to increase. We'll believe it when we see it. What happened? We were beating the stock up. Then all of a sudden, they started bringing in revenue and they started beating estimates. Boom, that's it. Flip the script, different story, right? So, I know technically Enovix has been beating, but you understand my point. Origin, I believe, isn't incurring these types of losses. I mean, we could double check. With all due respect, I look at so many stocks that you guys asked me to. It all kind of runs together sometimes, so bear with me on that. News comes a day after Enovix shares jumped. This company reported better than expected results. Yep. Enovix said Fab 2 is now operational and shipping samples to customers, and also announced a development agreement with, quote, one of the leading global smartphone OEMs with top 5 market share in China. So that is technically pretty damn good, because we know China's market is massive, right? So, and if you're dealing with one of the top 5 smartphone OEMs out there, I mean, technically that is good news. Unfortunately, when we get these updates, and it's all these companies really lately, it's not just Enovix, but a lot of times when we get these updates, we just hear about it, but we don't get any financials. And you're kind of in wait and see mode, right? Because if we instantly heard like, oh yeah, they're going to bring in like 10 million from this deal, it's like, yeah, boom, we got to pop the stock up, right? Because that's more than we've been bringing in every quarter. But as we said right now, if we're just talking about a couple of samples and we're waiting for a confirmed bigger order, then, that's why, again, the stock may just calm down and quiet down until that news comes in. Under the agreement, Enovix will develop a 100% active silicon anode battery customized for specific smartphone models. Well, I'd say it's good in a way that they can customize it for specific models, but also at the same time, you're going to go through all of this fabrication to make this specific customized battery, and then you can't sell it to anyone else, right? So that might be kind of like a one and done. However, again, getting an order, being able to do it, and then delivering and getting paid is what it's all about. So that sounds pretty good. But again, also, and I hate to bring up politics, but again, just remember, production facility in Malaysia. And I just want to mention again, if we have someone like Trump win the election, we might see a bump up in tariffs. Just something to keep in mind. Just something to keep in mind. The company said it is targeting the launch of its custom battery in the fourth quarter of 2025. So that's a year from now, right? So that's what I mean. And in the meantime, after it recently pumped off some other good news headlines, they decided to issue shares and collect $100 million for themselves. So this is why right now, unfortunately, I feel that this may drop before it runs, but it does seem like 2025 is going to be a much more productive year for Enovix. So if you guys, if you like it down here, market cap valuation, $1 billion and change, you're accumulating shares for the long term. I get it. But again, right now in the moment, bringing in a couple of million, costing tens of millions to do so. So, as I say, if Wall Street could bring a stock down, then they probably will. 100 million offering. Here we go. Just 2 days ago, Enovix price target maintained with a $30 a share target by Cantor Fitzgerald. Enovix price target maintained with a $25 a share price target by Benchmark. We have a lot of bullish, and pretty much everyone's bullish on it, right? They said what? Price targets between 14 and 100. So all of those are higher than $9. So this is what I mean. Over the long term, could be very, very nice. A quarter ago, it was expected, post a loss of 22 cents, actually produced a loss of 14 cents. Okay. Let's see the actual results here. The company has made significant strides in scaling its operations, particularly with the opening of its Fab 2 facility in Malaysia. This report provides a detailed overview. Okay, revenue increased was 3.8. Now we're up to 4.3. Company's GAAP net loss attributable to Enovix was $22.5 million. Significant improvement from the $115.9 million loss in Q2. Very nice. Adjusted EBITDA loss for Q3 was $21.6 million compared to a loss of $23.1 million in the previous quarter. Very nice. Company ended the quarter with $200 million in cash. Fab 2 now operational, has commenced shipping battery cells to customers, right? Oh no, wait, I'm confusing this with QS, right? Who mentioned samples. So now if we're up and running, that's what I mean. Now if we're up and running, that's why, so I'm assuming now the next couple of quarters, the revenue have jumped up a couple of million. So now if we're going to start shipping these out, over the next 1 to 2 quarters, I may have to reevaluate the situation and give it more potential future value than what we're currently seeing. Because again, I was talking about potentially slight beats over the next couple of quarters, which may still be rough because they're operating at a loss. But if they really start shipping these out to customers, and we see that, whatever it was, next quarter, 8.6 million, right? If they report like 10, 11 million, right? If we really beat that number, then we're going to start seeing big attention. And we may have to reevaluate the situation. Yep, leading smartphone, late 2025. Additionally, Enovix has aligned on a production schedule with a leading IoT customer, with mass production also slated for 2025. So this is why right now it seems like maybe like around the middle, towards the second half of next year, this is when the stock may really start rocking and rolling. So it might remain quiet for the next 6, 7 months. And then as we roll into Q3, Q4 of 25, people are going to look at the timeline and they're going to say, okay, we got this thing lining up with, right, with this smartphone manufacturer. We got this other deal here with this IoT customer that's expected here for 25. So some news may be coming. So now it's time to buy the stock, right? You understand? So that's why maybe like May next year, potentially June if the stock doesn't start running, right? That's probably, in my opinion, when you would potentially have to get into Enovix, because if they do beat it up, that should be near the bottom. And also, we have some headlines coming out potentially the second half of 25 that will most likely pump the stock up. It'll be viewed as positive, right? Enovix is focused on reducing cash consumption by leveraging its new Malaysia operations. Of course, it just started. Why not leverage it? Which is expected to provide runway into 2026. The company is also advancing its strategy in the EV market, of course, developing customized products with two of the world's largest automotive OEMs. Enovix aims to expand these relationships in 25, utilizing a capital-efficient, licensing-based business model in 2025. So again, is there future growth potential here? Yes, absolutely. Do I feel personally it is an immediate urgent buy here at $9? No, just because I think you can get 7. And again, I said that last time, and the stock went into a big sell-off and really pulled back to reality. So again, a situation like this, you may just have to remain patient. And especially again, since they just offered more shares and we're laying out a timeline that we have a bunch of stuff happening in 25, but we're still in 24, you may have time and they may bring it down before they bring it up. But again, you all who bought it at 10, 12 and still like it, as we say, if you do happen to have some liquidity on hand, if it does happen to flash drop down to 7 or 530, that trend line, hey, if you liked it at 10, you should love it at 5, right? And that's why I say, when something like that happens, especially if you're playing it for the long term, you should view it as an opportunity if you believe in it and want to keep buying shares. You should not look at it as, oh my God, it's down again. What are these guys doing? Wall Street sucks. No, you should view that as an opportunity, right? Take any negative, try to view it as a positive. CEO of Enovix expressed confidence in the, of course, he highlighted significant demand for Enovix's high energy density batteries, particularly in the smartphone and AR/VR headset markets. We also, did an update the other day, quickly looked at Meta, I think, right? They mentioned, or was it Apple? Yeah, the Apple Vision Pro headset or whatever. So that could be a new emerging market. Now, I know we tried with the wearables, didn't we? Like the Google glasses and whatnot. I don't know if it really landed too well, if memory serves correct. But either way, chances are there's going to be a market. We see videos of people, buying these VR headsets, trying them out, enjoying it, enjoying the experience. So if we can, manufacture these batteries for phones and for headsets alike, that should technically help open the floodgates even more to more future revenue. But again, this seems like we may really start moving along next year, not this year. Emphasized the company's focus on rapid execution to commercialize its transformative battery technology and meet industry needs. Yes, fantastic. For Q4, Enovix expects revenue between 8 and 10 million, right? We just looked. Previous forecast was 8.6 million. We said 8 and 10 million. And what I say before, if they come out and report 10, 11 million and change, all of a sudden we may have to reevaluate the situation. So in my opinion, I'd be more wait and see right now. And I'm curious to see what next quarter's numbers are going to be. But even in the immediate short term, let's just say over the next week or two, if it does happen to drop down to 7.25, 690 or whatever, then again, if you want to step in and scoop up some shares on that dip, I would understand that, especially if it would be lowering the cost basis moving forward, right? So something to keep in mind. GAAP EPS loss of 23 to 29 cents and an adjusted EBITDA loss of 17 to 25 million. So we're going to bring in 8 to 10 million. It's going to cost us 19 to 25 million. So that's what I mean. This technically is still an issue. However, the fact that revenue is now forecasted to start chunking up is a very, very good sign. Company aims to complete site acceptance testing for the high volume line and ship X2M samples in Q4 of 24, which is now. Well, we just entered it, right? So, yeah, actually, well, wait a minute, hold on. We just got earnings. End of October, so that would be November, December, that would be the end of January. I'm not honestly sure if we're going to see too much of a quote-unquote January effect volume influx into something like Enovix. However, we could get this news, apparently, this quarter. I mean, you might get that news before the ball drops. This is interesting. Okay. I still say, though, that trend line that we drew out, that support trend line, that's the level you have to watch here in the short term. And whether you agree with it or not, again, it doesn't always work out the way we logically feel it should, the way these stocks move. And whether you agree with it or not, if it does happen to break that support trend line, and we think we may see the 7s and the 6s, I would say, in my opinion, remain patient. And then once it cools down and bottoms out, if you want to step in hopes that you get like this announcement in the next like 60 days and change, understandable. And of course, as we said, looks like 25 is going to be a much better year than 2024 for the company. Yep, we just read that. Agreement for mass production in 2025. Analyst sees potential squeeze, but technical signals raise red flag. What is this? Wow, 44% short interest going into these earnings. And it's unfortunate because they beat, and initially the stock went up, and then they did a stock offering. Just dismal timing. Company probably could have ran back up into the teens. You know, I'm sure you guys would have got it trending and spoken highly about it if they didn't issue more shares. That is a very high short interest, though. I mean, we're talking about almost half the company right now is shorted. But again, as I say, if Wall Street, can short a stock and bet against it, they will. But also you have to look at the reasoning why, right? And again, in the numbers, that cash burn right now, in my opinion, is the reasoning why. Company's bringing in like 25, 30 million for the year. It's got a $1.6 billion valuation. It's costing them 20 million in change to bring in 6. Like the numbers are just too out of whack right now. So that's why I think, we have a high short interest. But again, when the company does get good news, it really does shoot up because you have the shorts scrambling to cover their short position. So I understand why a lot of you, really try to push it and really get pumped about it when it does have those big dips and those big sell-offs. So again, in the short term, if it drops to 7, 6 and change, is it going to suck for some of you? Yeah, of course. But also at the same time, that may kind of be hinting that, hey, listen, this is now the bottom. Everyone's going to start buying it. We might get some good news coming out soon. And then, boom, all the volume's going to come in. Stock may shoot back up to 12, 13 real quick, right? So that's why, again, you have to roll with the punches, so to speak. Peterson thinks a short squeeze might be on the table if Enovix delivers positive updates. This was, again, reported before earnings came out. And it was a positive update. And then, of course, the company said, oh, hey, by the way, give us 100 million. Here's some more shares. Short interest remains elevated. Customer validation, site acceptance testing, which we said now is coming up for this quarter, potentially. We may hear the news. And the much anticipated second smartphone OEM deal, which could very well involve a Chinese manufacturer. Well, he's bullish long term. Peterson has adjusted price target from 18 to 15. citing challenges across the broader space, but maintaining his overweight rating as he remains, quote, cautiously optimistic on the pace of Enovix's revenue trajectory from 25 onward. So he's optimistic, but he's cautiously optimistic. Bearish momentum, moving averages. While the fundamentals and analyst outlook remain bullish, excuse me, the fundamentals are not bullish in my opinion, I'm sorry. Analyst outlook remains bullish, I agree. While the fundamentals and analyst outlook remain bullish, that's a lie. The technicals show that Enovix could be in for a rough ride, at least in the short term. That ignites a short squeeze. All right. Maintain overweight JP Morgan. This was before earnings. Price target cut from 18 to 15. So yeah, everyone's still pretty bullish on it, which is why I feel, again, that we can potentially keep them flat or down in its current state. However, if we fast forward here again, and as I said, if the company instead of 8.6 million, they post 10.6 million, 11.3 million, right? If they really all of a sudden blow this number out of the water, then I think everyone's going to jump on board. Price targets are going to be raised probably into the 20s, and this kind of long-term channel may be broken out of. Whether I agree with it or not, that could potentially happen. But as we said, you guys saw me just draw out this trend line earlier, and that's right where the stock dropped to, and then had a little bit of a bounce. So we have to see now, this is the level it has to hold. Roughly the low 8s here, looks like 817, 820s. That's the level. And if it breaks, it's going for a ride. I'm going to tell you that much right now. Because if we look at the numbers, I believe they still look a little rough. So we see the debt jumped up slightly since last quarter. We're up to 194.65 million, but we have 200 million on hand, so that kind of cancels it out, right? Free cash flow minus 50 million. That time last year, minus 45.5 million. So this is what I mean. Some of these numbers are still heading in the wrong direction. Even though it does seem like overall the EPS loss is for the most part coming in above analyst expectations, which means technically they should be able to keep their heads floating above water. We have short-term assets heavily outweighing short-term liabilities, long-term kind of neck and neck. If we switch over to the balance sheet, we can see the equity is down pretty big over the last several quarters. We went from the low 300 million mark, held around the mid 200 millions, and then recently we broke into the 173 million. As of last quarter, 170 million equity. Now again, the debt and the cash kind of canceled each other out, right? So now we're looking at equity here, a positive equity of 170 million. Now I understand last quarter was a rough quarter, but again, if we look at the revenue brought in and then we subtract it from the losses, you'll see that technically the negative outweighs this 170 million. So right now, in my opinion, fair value of this business is like flat. Fair value of this business, you can literally, again, I know you don't want to hear it, but if hypothetically this market cap dropped to like 400 million, in my opinion, it would be justified. It really would, right now in its current state. But technically, I know you all like it, and as we said, you all kind of get it trending when the stock takes a big dip. They always, it's always re-mentioned, oh yeah, listen, it's heavily shorted, it could squeeze at any time. So that's why you're kind of creating the support level of the stock based off of that potential that the squeeze can happen, right? Which is why, as I said, even if it does happen to pull back to 765, it's probably not going to be the end of the world, but based on the fundamentals we just looked at, as I say, if markets do begin to chunk down, Enovix will go lower. I am saying that right now. Book value per share down 50% roughly over the last 18 months. Went from $1.97, now it's sub $1. Still, yeah, see, it remained flat these 2 quarters, but it's been basically steadily dropping over these last 8 quarters, 7 quarters. We're down to 94 cents. So we're trading, 9, 10 times book value here. Again, for a company losing tens of millions to bring in 4 or 5 million, that could be viewed as an overinflated price to book ratio. Price to sales now back down to earth. We were several thousand for some reason. We're now at 76 times sales. We have no earnings. We have no positive cash flow, so we have no data. Data. Is it data or data? What do you guys say? Because usually, sometimes I automatically say data, but then I always think of Star Trek Next Generation, data. So I do like data over data, but okay. Price to book, 9.5 times. And you can see the norm was kind of like 7, 8, back down to 6, right? You had the break up to 11, then we really exploded, and then we pulled back to 10, now we're sub 10, right? So that's what I mean. Now, right now, for these 3 months, we're at 9.5, but we can fast forward 3 months and we can drop down to 8.5, 7.5, right? Because that's kind of the average of where it was about a year or so ago. So only time will tell. Enterprise value, supposedly when another business is willing to pay for this business, $1.6 billion, current price right now. Our return percentages are growing in the wrong direction. Our gross margin percentage was minus 58,000%. So now it's only minus 151%. So technically that's really up big, but still bigly negative as well. Operating margin, same thing, was completely in the gutter, still sitting here at minus 1,000%. EBITDA margin, again, earnings before interest, taxes, depreciation, amortization, was almost minus 300,000%. We got up to minus 459, back down, slightly back up, minus 920%. Net margin percentage, same thing. Massively negative, still bigly negative, but technically, this is the best it's been at minus 522%. So, again, I know you guys like it, and I know you're saying, you watch, they're going to get, 50 clients from all these companies. Everyone's going to want, their batteries. Okay, fine. When it happens, though. It's that simple. When it happens, it happens. Because we are kind of making the argument, again, stock could drop down to like $3, $5, and you really can't say anything. So, let's see what happens. But again, in my eyes, on the technicals, because again, the short squeeze play, I feel the short squeeze rumor may be outweighing these dismal fundamentals. But again, in the technicals, you have to keep an eye on that trend line, in my opinion. That is going to make or break this situation in the immediate short term anyway. But inventory turnover is down, but we know that we just got the Fab 2 facility going in Malaysia, so hopefully we're going to start pumping out more high volume, as they said, so I'm not really looking at that. Asset turnover, well, we went from no business to some business, so technically that's up. The debt, though, yeah, see, the problem is all of these other metrics, like the equity and whatnot, all of that we saw was kind of consistently decreasing as the debt was slowly climbing over the last several quarters. So now our debt ratios have climbed, but obviously, well, hopefully, if they keep losses in check and the revenue starts chunking in, then all of those numbers will, kind of regulate themselves. We have no dividends. Yep, we looked at this before, beating more times than not. Let's look at an annual scale. Okay, so for 2024, 22 million. Right now for 25, 41 million. Based on what we read, I would have assumed it would be more than 41 million. I will say that. However, look at after that. 2026, expecting basically a fourfold increase, going up to 185.23 million. Now that is a jump in revenue. And then 2027, 607 million. So again, if you're telling me you like this company going out to 2027, 2028, I agree. But my main point again is we always talked about pricing and timing. And I know a lot of you are existing shareholders, so you don't want to hear anyone talk negatively about your stock. But for newer shareholders who are eyeing it now, contemplating, oh, should I buy it here at 9? What do you think? In my opinion, I think you might be able to get a little bit of a better price. Because even at bringing in 30, 40 million for the year, it could be viewed as overvalued. If this comes to fruition, then we have massive value. That would change everything. And that's why I think that the deals may get set and started and put in place in 25, and the actual business explosion will be seen in 2026. Which again, reading a lot of those news updates prompted me to say that maybe like April, May, June of next year, maybe you can start to look at that as like now is the time, like I have to start accumulating a position. In my opinion, that's the way I'm looking at it. And if the company randomly reports something tomorrow and the stock explodes on good news, obviously that's out of my control. I don't want to hear it. But you understand the gist of everything I'm saying. But for the most part, everyone's still bullish on it. As we see here, we got 13 analysts covering the position. They're all telling you to buy it or hold it. Price targets ranging from 10 to 100. So, again, looking at those numbers, fast forwarding to, the end of 26 going into 27, looking at those hundreds of millions of revenue coming in. Yeah, this is possible, believe it or not. This is possible. Right now, not possible. And that's why you see the stock, it'll hang out in the high single digits and then boom, it'll start running 12, 13, 14, and then it'll stop and just immediately start chunking back down 10, 9, 8. So that's why a situation like this, you just kind of got to pick your spots. And it looks like you have, maybe like a year and a half before this really starts chunking in. But if they can do this, that would be one hell of an explosion in price. So it is possible, but we're talking very long term. And right here in the short term, again, got to keep an eye on that trend line. Let's go to stock charts real quick. I'll let you go. Daily RSI now down to 38.67. So even on the news of the offering, the RSI didn't drop down to that 30 benchmark. So this is why, again, keep an eye on that trend line, because if they want to retest it and bring it back down, if they break it, this could easily drop down below the benchmark and it can continue to sell off. So we'll have to keep an eye on Enovix. But technically, again, on that offering, they beat earnings and then offered shares. And the stock dropped below the 50 and 200-day moving average. MACD steadily decreasing. Looked like it was starting to, try to curl. But of course, that news didn't help. Over to the weekly, we can see, look at that bottom Bollinger Band, 626. However, again, technically, this is our low, our low, our low. So we have, that's the trend line right there. And that's why I'm saying, if it does break that, I showed the other trend lines. Maybe you can see 730, maybe you can see 630, so it could happen. Look at the MACD. Came back up, was flat, was ready to cross, in my eyes. And then, of course, they offered more shares, so we head back down to the downside. So we'll see if they break this pattern and go down, or if we just continue to kind of maybe flatten out here, and then next earnings, maybe they beat and it pops. But RSI on the weekly time frame, 44.5. And again, even on that news, we dropped down, we sold off big, but the RSI only dropped into the 40s. So that's why over the next couple of weeks, this may potentially continue to slip, come back down to around that 30 benchmark, and then the stock can bounce a couple of weeks after that. So we'll see. But yeah, this is one that can change on a dime based on what news is released. And I for the very long term, I like it. If you're not positioned, I think you can get a better price. And just remember, if you disliked the video the last time I said it back here in June, just remember that I was correct. And instead of buying at 15, 16, you could have bought the stock at 8 and 7. So again, whether you agree or disagree, sometimes what happens, happens. And that's why I said you got to roll with the punches. And if you're in it for the long term, then as we say, keep an eye on earnings, keep an eye on news. But for the most part, try to block out the short-term volatility and look for that long-term growth. But that's pretty much it, so I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If we have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Enjoy your weekend.